We had the industrial stocks. Those were some of the places investors fled amid these concerns about trade between the U.S. and China and maybe elsewhere. The stocks closing lower were Caterpillar, Boeing, CSX, General Dynamics, Deere. Mike, a familiar list.
Yes.
In Boeing, it's not a name that suffered either. I mean, to Carrie's point, these are companies that had done quite well coming into this. But it is true now. We're going into 6 months.
Yes.
If you take the Dow from the highs when the president was in Davos and talked about cracking down on trade with China. This is, it's not been 6 weeks anymore. It's not been 3 months. This has been going on for a long time. And does the whole trade thing need to be moved off the table before the stock market is able to rally again?
I wouldn't say it has to be moved off the table. I do think it's coinciding with a few other things that are going on, such as economic growth in the rest of the world definitely came off the boil at the same time. The manufacturing purchasing managers indexes rolled over at the beginning of this year as well. So all that stuff is not great for the industrial stocks that were up a lot. And that's also where you would worry about the fact that if we are seeing the peak in earnings growth, that's going to be an issue. So I think trade, yes, they're guilty until proven innocent from a trader's perspective. When it comes to any time trade flare-ups happen, fine. Sell Boeing some more. It's still up a lot over 12 months ago. I don't think that means that it has to be completely tied up in a bow on the trade front before we see the market make more progress.
And Lizanne, I guess the reason it's hard to be too upset about even the range that we're stuck in here in the markets is that we were so strong into that late January high that it was starting to look parabolic, and you don't want a market like that either.
Yeah, so a couple things about that. I actually think that one of the primary reasons for the correction that began in late January was, to your point, the parabolic increase that had preceded it and what happened to investor sentiment. It had really gotten quite frothy in the December-January time period. And I think that is an important factor. A lot of that obviously has come off the boil, and I think that's a good thing. But of course, we've got other sort of impediments right now for the market that have nothing to do with trade or are maybe only indirectly related to trade, not least being tighter financial conditions, stronger monetary policy. The one that is to some degree tied to trade has been the recent strength in the dollar, which has implications for corporate earnings and multinationals. So I think that we do not need to see, some calming of tensions on trade for a sustainable move higher here. But there are other factors with which the market's been grappling, and those aren't disappearing anytime soon.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.